Hey folks, happy Saturday. It's time for the top 20 list. The top 20 list is based on the MaxFactor. The MaxFactor is my own metric. I don't think traditional Wall Street TradFi has a good way to explain these high yield option based ETFs. So I invented a metric that gives us a great way to study these and compare them on an apples to apples basis. Stick around, we'll get right in the middle of it. All right, top 20 MaxFactor high yield ETFs of the week. Now, this is the short-term MaxFactor, but the short-term MaxFactor is the MaxFactor. So to be considered for the short-term MaxFactor, you have to have a yield of 6% or get a waiver from me, and you have to have been around for at least 90 days. We need at least 1 quarter's worth of financial data in order to measure the ETF. All right, starting at number 20. We have XYLD yielding 12.81% with a low volatility of 6. That's a very, very low volatility. Number 19 is QYLD yielding 12.84% with an also low volatility of 7.9. GLDY yielding 43%. This is based on gold. This is from our friends over at Defiance. It has about a 10 volatility, or it's at 10.8 volatility. Now, number 17, we have CHIP-Y. Now, this thing yields 34.69%, but it has a 23 volatility. For the quarter, the NAV by itself, excluding the dividend, is up 4.2%, which is impressive. Now, this one's volatility, you see at 23, is about twice what GoldY's volatility is at 10, and GoldY's volatility is more than XYLD and QYLD. The volatility, a good way to think of this is in an average year, you might expect CHIP-Y to be up 23% or down 23%. That would be a very standard year, maybe even up twice that much, even up 46%. That could happen, but by the same token, on something like XYLD that has a lower volatility, in a good year, it might be up or down 6%. And maybe if it had a really good year, up 12% or something, but it's just less volatile. It's not going to move up or down as much just on a statistical basis. That's what the measure of volatility tells us. Number 16, IWMW. Now, this one has a volatility of 12, which is approximately the same as the SPY. So you guys have a feeling for how volatile the SPY is. Well, this has SPY type volatility, but it yields 23%. It's based on the Russell. 1-year total return of 8.7% and a quarterly NAV return excluding dividends of 4%. That's really good. That is really good. Now, number 15, AMDY. This one's based on AMD. It's from YieldMax, yielding 61%. Now, this has a sky-high volatility, highest volatility we've seen so far. So, but like I say, that tells us in a good year, this could easily be up 60%. And you really can't be surprised. But it could also be down 60%. And just from a statistical basis, you really can't be surprised. All right. Number 14 also has a high vol at 55, but this is from our friends at Roundhill. It's based on Tesla. Tesla has been a good underline and has been killing it lately. This thing yields 44% with a quarterly NAV return, excluding dividends, 11%. That's incredible. Just the NAV alone's made 11%. That's not supposed to happen in these high yield ETFs. That's why I had to invent the MaxFactor as a way to describe the ones and to measure the ones that are outliers. And TSLW is definitely an outlier. Number 13, TSLY. Okay, this is also based on Tesla. This is from YieldMax. So traditionally, the YieldMax offerings yield more, but have a little worse NAV return, and the total returns usually similar. Let's see if that held true this time. The yield, TSLY yield 104, TSLW only yielded 44. Okay, so YieldMax has more yield. We'd expect that, but YieldMax only got 4% NAV return, which isn't bad, but it's less than TSLW that got nearly 12%. Well, that's just kind of the way it goes. That's just the math kind of working the way it's supposed to. Number 12. Remember, a high yield is a tax on the NAV. It's an excise tax on future NAV upside. All right, number 12, IAUI based on gold, 10.3% yield with a very stingy volatility of a 10. Just should be very stable. Up 10%, down 10%, maybe in a good year. Now, it's doing well lately. This quarter, the NAV is up 9% just by itself, and you add the yield on top of that and play that forward over a year, it's having an outlier of a year. But based on how volatile it is, it's a pretty stable ETF. Gold I, you want to talk about stable, this thing is only a 6 volatility. This is also based on gold. This one yields a little bit better than IAUI. They're both based on gold. This one yields 14.1%. Now it has a little bit less NAV return, but they're both doing pretty well. IAUI basically earned 10% NAV only. GLDI earned 6% NAV only just this quarter. Gold's having its moment, of course. Gold has been running the asset, the commodity, or the gold futures, whatever. Gold has been running. Gold has had its moment, and it's having one for a while. SLVO is based on silver. This one's yielding 17.9%. It has a little bit more volatility than the 2 gold ones we were looking at, about twice the volatility of gold I. But this one's killing it, a 10.2% NAV return. They say silver's the new gold. Number 9, XYLG, yielding about 23% with a really stingy vol of 8. That's a really safe, non-volatile type ETF is this XYLG. Just this quarter, it's had 4.6% NAV return. Now, I have to say this every week, but this one has an asterisk. It doesn't really yield 23% on a regular basis. It yields 12%. But they paid a one-time dividend last year for some reason, and it made the yield go up. So this is on here, but it's with the usual asterisk. Not a bad fund, but it probably wouldn't really be ranked number 9 were it reflecting reality. Number 8, TLTW. Wow. Now, this is interesting. This is based on bonds. This is based on a 20-year bond ETF called TLT, which is kind of the SPY of the bond world. And these guys sell options on it, and they've turned a boring ETF into a 15.87% yield. They're getting NAV upside like crazy, 5% just this quarter. Super low volatility. I mean, this is a good fund. I do have this in my portfolio, but it hasn't been doing well. But maybe I need to take another look at it. It's number 8 on the MaxFactor. Of course, the market's been acting kind of crazy also. So, we'll see. Anyway, let's see what happens with number 7. Number 7 is K Gold. This is based on gold from Howard Chan over at Curve. Now, Howard's never met upside he doesn't like to catch. Look at the quarterly NAV return of this ETF, 24, nearly 25, and it's paying nearly a 10% yield with a decently low volatility of 14. That's a good-looking ETF. All right, GUIs from YieldMax is based on Google, yielding 41%. Volatility about twice that of a market-type volatility, twice the SPY. Number 5 is Goop, also based on Google, but this is from our friends at Curve. So what do we know about Curve? They usually get more NAV. Howard loves NAV, but doesn't love yield. So let's see if this holds true here. And I'm just joking. Howard loves yield also, but he pays the yield he thinks is appropriate. So he turned Google into a 15% yield, but with a 20% NAV return. Well, the guys over at YieldMax had more than double the yield, but a little bit less than half the NAV return. Okay. Howard's plan had a little bit less volatility. Something that's interesting to note between these two is Goop uses a monthly time frame for options. Goop uses essentially a tasty trade type method of premium selling, where GUI uses a more aggressive strategy and a weekly strategy, and that would account for the higher yield. All right, but also it would account for the higher volatility. Number 4 is TS2 from Rex. Okay, this is an interesting one. Of course, this is based on Tesla as well. These guys at Rex have a kind of a different way to do it. They kind of mix the round hill strategy and the yield max strategy together, and they've had decent results so far. This TS2's yield at 38%, but look at this NAV return. NAV only 21%. I mean, that's insane. That's insane. TS2 from Rex. All right, number 2 is iGold. This is based on gold, paying a 15% yield, a very low volatility of 11. But these guys had a 15% quarterly NAV return. That's a really good quarterly NAV return. Also, not quite as good as TS2. Who do you guys think number 1 is? Oh, look at this one, TSLP. All right, now Howard's been on the list. This is from Curve. These are the guys that love this upside. So what would we expect? We would expect, compared to the other offerings, we'd expect less yield, but more NAV returns. So let's compare TSLP to the next closest Tesla surrogate, TS2. So TSLP yields 39%. TS2 yields about the same, 38%. Okay. NAV return of Curve and Rex are almost the same also, 21 and 20. Wow, this is really close. Rex's volatility is a 43. Curve gets them on volatility. Their volatility is only a 34. It's quite a bit lower. Wow. But you have some good choices in there. If you want to play a Tesla fund, you have several. If you want to play gold, you have several choices in there as well that are legit good choices. All right, next we have the long-term MaxFactor. And to be on this list, you have to have been around for a year. And a lot of these funds haven't been around for a year. So this list isn't necessarily the most fair list. But I like to look at it nonetheless to measure, to get a broader look at the perspective. But a lot of these, a broader perspective, a lot of these we've already seen on the other list. All right, number 20, NFLP. We didn't see this one on the other list, and this is why. See this quarterly NAV return? It's negative on the quarter, but hugely positive on the year, up 31% on the year, paying a 25% yield. That's with the 19 volatility. So call that about 50% higher volatility than the SPY. That's not too bad for a single stock based on Netflix, and that's from Curve, NFLP. All right. KQQQ, also from Curve. Howard has been dominating this list. With the recent market pullback, I think we can see that the funds with the lower yield also has a little bit less risk. And so some of those funds have risen up to the top, where some of the higher funds, higher paying funds, I think have kind of moved down the list. Anyway, number 19, KQQQ, yielding 8%. Decent volatility at 15, but look at this 1 year total return of 21%. That's good. NAV return of 5% just this quarter, excluding dividends. That's great. Number 18, YMAG. I really like this one. Down a little bit on the quarter is why it didn't make the other list. The recent pullback in some risk assets kind of got YMAG, I think, knocked them off the list. Still has a decent 1 year total return of 20%. Very competitive volatility at 16. I would definitely call that on the lower side. Speaking of low volatility, here's CLM. This is a closed-end fund from Cornerstone. This thing only has a 12.5 vol. So that's a good approximate market type volatility. Similar volatility to the SPY, but unlike the SPY doesn't pay a 17.49% yield. Great job, CLM. Number 16, Infly is up 34% total return on the year, yielding 50% based on Netflix from YieldMax, a 22 vol. Good job, Infly. Number 15, Gold Eye, yielding 14% with a 24% 1 year total return. That's a good one with a really stingy, low volatility of 6.70. Then we have IDEVO. Now, IDEVO is the one on the list that doesn't yield. There's several on the list that don't yield 6%. I made an exception to put them on here, if for nothing else, to compare them with the higher yield funds. I believe also SCHD is on here also, more for comparison purposes. And there's 2 or 3 other funds which I've given a waiver to that don't pay 6%, but are on the list. Anyway, none of those funds made the top 20 tonight, though. IDVO's the only one that got on with the exemption from myself. But it's, and I do that because a lot of you guys like this, and we like to follow it. It's a good fund, and it doesn't yield that much less than 6. It yields 5.3%. 5 years ago, that was really good. I mean, because it's like triple what the SPY pays. And you have SPY type volatility, 11.5. You have SPY like total return, 25. You have, it's a SPY like fund that's yielding triple the SPY. So, I mean, come on. All right. TSMY based on Taiwan Semiconductor yielding 56%, up 22% for the year. Total return OARC yielding 54% and up 31% for the year. Kind of volatile, about twice market volatility, but that's fine. It's based on a lot of techie and AI type, autonomous driving type stuff, Kathy Wood specials. So twice market volatility should be expected. Those are more risky than your typical big tech SPY stock. Anyway, AMDY, speaking of big tech, this is based on AMD with the sky high volatility of about 67, but you're getting a huge yield with it and a good 1 year total return at 17%. Number 10, SLVO yielding 17.9% with the 1 year total return of 32%. Great job based on silver. Number 9, BABO based on BABA, high yield fund paying 70%, getting great 1 year total return. Decent NAV return. It's up 3.1% just on NAV this quarter. It's not bad, right? We'll take it. Volatility is a little bit high, in my opinion. Number 7, GUI. This is from YieldMax. This is based on Google, yielding 41%. Solid in all elements of the game. Volatility is decent at 25, mid-pack. Quarterly NAV return is out of sight at 10. 1 year total return is way above average at 28, or above average, let's just say, and the yield at 41%. All right, next we have iGold, not yielding as much. It only yields 15%, but it has about 1/6 the volatility. This is based on gold. Been doing great this quarter, up 15%. Been doing well this year, up 32%. Who's number 6? Number 6 is Goop from our friends over at Curve. So as we would expect, lots of NAV return, good total return, yield smaller than some of the competitors, but still generous at 15.45%. Number 5, GDXY from YieldMax. Now this is based on gold, but it's based on gold mining stocks. So compared to the other gold issues, this one has a higher volatility. Well, gold mining stocks are more speculative in nature than, say, the GLDI is based on the GLD index. So those cover calls on the GLD index, which is just based on gold, the commodity. So anyway, GDXY is doing a great job yielding 44%. I have this one myself. And it's impressive that it's still on this list after it was down big the other day. 2 days last week, it was down big. Number 4, Snowy based on Snowflake, yielding 77%. 1 year total return of 60%. Come on, this is out of sight. Had kind of a rough quarter, down 8% on the quarter, but I mean, doing great in a longer term perspective. Now, TSLY at number 3, these Tesla ones are incredible. This is YieldMax yielding 104%. 1 year total return at 50%. Heck yes. Number 2, TSLP. So we have here the 1 year total return at 57%. This is from Curve based on Tesla. We've looked at these before. The yield is less at Curve, but NAV return is more. And then if we look at total return, that's anyone's guess, but in this case, Curve has it, but not by much. They both did pretty well. Curve has a 57% total return for the year, and TSLY has 50%. But given the volatility, I think I could justify TSLP being ranked ahead of TSLY. This is what the MaxFactor tries to identify, the better risk-adjusted reward. Number 1, who do you guys think it is? Ooh, look at that, Palti. I know old Rachel from Yield and Grace will be happy about this. I was just reading one of her tweets, and she was talking about how happy she was with Palti, and who can blame her? This thing has a 123% 1-year total return, and it combines that with a 90% yield. Now, the quarter's been kind of rough, but I mean, my gosh, this thing is incredible. What do you guys think? Did your favorite ETF make the list? Now let's look at all ETFs. And we're going to sort it by something I call Max's Moxie, which is really just a measure of fund's potential. It shows you how much potential reward the fund is offering per unit of risk. Alti's number one on this one. Look at Alti's. The thing that's impressive to me about Alti is its volatility. It's only a 19 vol, which is pretty good considering the stocks that it sells covered calls on. Nonetheless, Alti has got beat up lately. It has a negative 18% quarterly NAV return. It did not make the list this week, and I can understand why it's pulled back. But it is on the it still has a lot of potential, as do all these. USOY, I know a lot of you guys like TSYY. This thing's yielding 198%. And yeah, its volatility is at 37. That's actually not that high considering the amount of yield they're offering. So then we have Fiat, IWMY, Misty, GLDY, Triple QY, WDTE. YMAX is a good one that has a lot of potential. We didn't see it on the list this week. It was on the list in the past couple of weeks, but it fell off the list. You know, they're down 11% NAV only just for this quarter. Despite that, YMAX still has a 1-year total return of 18%. And combine that with the yield of 68%, but it just wasn't quite good enough to make the list. In any event, you can see some other ones here that I think you guys like. SMCY. Boy, XBTY has kind of had a rough time with crypto pulling back. This XBTY sells options on leveraged crypto, and so it's down 36%. It's kind of been beaten up in the pullback, but we'll keep an eye on that one. Now, let's see. We have to pretty much see where Misty is to satisfy the Misty Mafia. We don't want to leave out the Misty Mafia. Let's kind of look at Misty's results. And also, I want to check Blocks because I just think Blocks is a special fund. But nevertheless, what I think doesn't matter. The numbers don't add up that it would be on the list. But let's go evaluate the numbers and see why it isn't on the list and how far it is away from being on the list. All right. So Misty, look at this thing yielding 233%. Now, part of the reason it yields that much is because the NAV is down 45%. But this quarter. Okay. Well, the MaxFactor parses all that out and it can figure out what's going on. But yeah, Misty did not have a good enough metrics to make the list. Now, that's the bad news. The good news is it's still up 27% total return for the past year. And it's a 55 volatility, but that once again isn't considering the high yield, it's not unexpected. Let's just say that. And now let's look at Blocks. I kind of have my feelings hurt. The Blocks wasn't on there, but Blocks has got beaten up lately. Now Blocks, actually, the thing with Blocks is for the quarter, it's still up. It's only up 5.69%. Blocks has pulled back a lot this past week. It was up way more than that. So Blocks also paid a 30.4% yield, up nearly 6% on the quarter. But unfortunately, it has a really sky-high volatility. Its volatility is 41. Let's compare that to Alti, and Alti's volatility was 19. Call it 20 to make it easy. So Alti's volatility is half Blocks. But yet Alti has more potential as far as yield goes because it has that triple-digit yield potential. Now, Blocks is only paying a 30% yield right now. I would imagine Blocks will be back on the list soon, or I sure hope it will. But we'll keep an eye on that. Anyway, did you guys' favorite fund make the list? I sure hope it did. Remember, the MaxFactor is measuring past results. It's not a predictive index, but I do think it's interesting to see. Here's what I always say. It's not only how much return the fund makes. It's how the fund makes the return. What are they giving up to pay that yield? What are they giving up to get all that NAV upside? What combinations are they using? Where's the sweet spot? The MaxFactor identifies the sweet spot. All right, guys, thank you so much, and you have a wonderful day.